Most of you heard of the Wall Street saying, bulls make money, bears make money, but pigs get slaughtered. Nobody wants to be taken for a ride, and brokers and prop firms are in the Forex business to make money just as much as traders. In this video, I'm going to talk about what is a toxic trader. Are you one? Hey, it's Frank Nagy and welcome to my channel where we help financial entrepreneurs grow their business in the financial market. If you're new here, subscribe to my channel and hit that like button and the notification bell. There are two types of traders in the Forex prop business. Traders that generally want to trade their strategy and continue to learn more about how they can improve their trading, and toxic traders. As a prop firm or Forex broker, you need to first identify toxic traders and know what to look for. These traders can be taking advantage of inefficiencies in less sophisticated trading platforms or trading at the same time in the same direction across several trading venues. Either way, this behavior is considered by brokers and prop firms as toxic. Hiring experienced prop firm consultant and broker-dealer consultant like Frank Nagy Financial Services will greatly reduce the burden of setting up your prop firm. A good consultant will make the appropriate introductions with liquidity providers, software vendors, financial management tools, and risk analytics software that will help you identify toxic traders for your broker-dealer or prop firm. To what level do brokers and prop firms endure this activity is entirely dependent on each individual brokerage firm and prop firm. What may be acceptable with one firm may be prevented by another. Now here are some examples of toxic Forex flow so that you can be aware of it and how to identify it. Latency arbitrage. This type of trading relies on the latency or slowness of a trading platform. Toxic traders place trades and then cover those positions with platforms that catch up in the market and results in a profit for the trader. Forex traders sometimes engage in other toxic practices to pass prop firm challenges. Some of those common practices include cheating on the challenging rules by using multiple accounts of sharing information with other traders, paying for multiple accounts, and executing trades in the opposite directions in each account, manipulating trading conditions to gain an unfair advantage, such as abusing the slippage or exploiting latency, using automated trading systems or bots that do not comply with the challenge's guidelines, engaging in high-risk strategies that jeopardize the account equity, like excessive over-leveraging, more like gambling. It's important to remember that the goal of your prop firm or broker-dealer challenges is to assess a trader's genuine skill and discipline. The truth is that it is a never-ending battle, and you will need to implement some basic rules such as establishing a system to detect predatory trading patterns in real time so that the system can immediately widen this trader's spread. Immediately contact the toxic trader if your trading rule is breached and detected. Discontinue the pricing as needed, especially ahead of news releases. Hey, if you're thinking about starting your own Forex prop firm or hedge fund, I recommend my ebook bundle, The Ultimate Prop Firm Guide and The Ultimate Hedge Fund Guide. Click on the link below in the description box.